What's up everybody? What's going on, Bosquez FX family? I hope you guys are all doing good, and welcome back to Bosquez FX YouTube channel. We do appreciate you guys to have you back once again here as well, guys. We'd like to thank you all who just subscribed to our YouTube channel. If you have not yet done so, please kindly hit the subscribe bell and turn on the notification icon so that you will not miss out any new concept from this channel. So guys, in today's video I'm going to share with you the most high probability forex strategy you ever use. So this strategy, it's very easy. You just have to follow each step by step, which we are going to show you until to the end of this video. As well, if you are also new here, we also talk about smart money concept, ICT concept, and order block strategies. If you are looking forward to learn about those concepts, you are most welcome to join the family. So guys, the first thing which you have to look for when you open your chart, right, is to understand your market structure. So we all know that we look for this basic of market structure. Let's say the price is going down, right? We look for this basic market structure whereby the price will be creating what we call lower highs and lower lows, right? Lower highs and new lower lows. And then what you have to understand, guys, you have to understand that sometimes the price will be coming back not to the actual what, to the actual supply zone area, something like this. They'll be coming back to these zones, around this zone, then they'll continue going down, and then suddenly you see price going up, right, creating a new, this will now become a new what, a new higher high, meaning all of these lower highs will be taken out, and then you can now say this is a change of character, right, because you have a breakout structure here. So you anticipate a move like this whereby the price will go to the upside, but the price will not go up, but the price will do something like this. They will go down, meaning the price will continue going down, and then you say my market structure failed. So what you have to understand, right, for you to validate a swing high or a swing low, if the price is going down, you have to see something like this. Let's say the price is going down, right, and then they'll do something like this, right, and then the price will give you a pullback, continue going down. This means that you have a change of character, but you see the price going down, and they will do the same thing, right? They'll do the same thing. Then you see price doing this. So what you have to understand, to have a valid low, or what we can call, this is a valid low and this is a valid high, right, we have to see price coming back from this low, taking out a high. Now we can call this low a swing low, and now once price comes back to the high, we now call this a swing high, meaning the price will now come back either to breaker, right, either to breaker block, and then they'll go down, or to enlast the opposite candlestick, and then they'll go away to the downside. So this will now become your swing high, and this is a swing low. So this will not be a new swing low, and this will not become a new swing high. Why? Because you want to see this zone being induced, and then you can call this swing high and this swing low. So this will just be a liquidity build. This will just be a liquidity build right here. It will be just a liquidity build right there, and then the price will go down. So what I'm trying to say, guys, what I'm trying to say is that whenever you are looking for a trade, right, to consider this a swing high and this a swing low, you want to see a inducement, something like this, right? So now we can call this a swing high and this is a swing low right there, and we anticipate a move to the downside, something like this. So sometimes they can give you something like this, and the price will just induce the zone like this. But I'm not saying that they will not give you this market structure. It's still the same market structure, but that you just have to understand, if they continue giving you these zones and then mitigating them, right, mitigating this, it will now become a liquidity, meaning the price can give you an impulsive move to the upside, and then they can also continue going away to the downside. But now I'm gonna show you some example on Nasdaq, and then I'm gonna show you some of the example on the real trade which we took today, right, using the same strategy. So as you can see, guys, this is Nasdaq, right? You can see that we have this high, we have this low right here, right? But you can see that we also did have a high here, this is a low right here. Then the price just came from a fair value gap. Now they're going down, right? You have to understand now the price is going down, so they will be creating new lower lows and new lower highs. So you can see here they took out this previous higher low, right, which help us to understand that the price is still going to the downside. So after taking out this previous higher low, they have created a new lower low. So some, they will take this zone as their order block, as a demand zone area. But for me, I'll not take it out. Why? Because I'll be looking for shorts. So what I'll be looking for, I'll look for the price to give me an inducement. So this is an inducement right here, guys, as you can see. So this is a liquidity zone, because you can see that the price even give us a what? A drop. This is a opposite candlestick. So this is a base, another drop, base, drop, then pull back, meaning the price have given us a inducement, then the price goes down. So this means that this was our inducement here, so this was our supply right here. So this was going to be a successful supply zone area. So if price continue giving you this continuous drop like this, it's what we call a liquidity. The price have to liquidate the zone or sweep out the liquidity, something like this. So let me give you another example. So as you can see, the price didn't stop, they did give us a periodic drop right there, but you can see that they took out this structure. So the next thing, you wait for the price to come to this supply zone A, all right? But no, why? Because now the price have given us a breaker here. Remember, this is a failed demand. This is a failed demand. The price fell to all the orders because we did have a change of character. You can see that this change of character didn't work out. The price came back and took it out. So you were expecting the price to come and do something like this, but it didn't give you that. They continued going to the downside. So this, we call it a breaker. And as well, the price now rejected to a demand. So we did have a demand zone area here, right? We did have a demand, and you can see that the price have been creating those continuous move which I was telling you. You can see these are the continuous move whereby the price, they are just respecting those breaker. You can see they did respect this breaker at the top right here. We also had supply. You can see the price respected this supply. We also had another breaker here, but the price respected the imbalance here. So meaning the price have created a lot of what? A lot of low, high, low, high, low, high, and a new what? A new low. Then they give you something like this, then they went up, something like this. So the next thing which you now expect, you expect the price to come and turn to this point right here, guys, as you can see. And now the price just give us a bearish momentum going to the downside. Because why? Because they now give us a inducement. So the inducement was here. The price induced this swing, these lower lows coming back to this one. Why is this valid? Why? Because we did have a drop, base drop, right? And as well, this was our swing low, and then this was our swing high, and we did have a breaker. So that's why the price came back to mitigate that breaker and shift the market going down and sweeping out the liquidity at this momentum. So this was a liquidity zone area, and the price sweep out that liquidity now, and now the price went down. And now, as you can see, we did have a valid a valid swing low, and this is a swing high, right? Now you can see that the price have failed. This is a failed demand, So the next thing which you anticipate, you want to see a inducement, and then you look for your trades at this breaker, because this is a failed demand. The price had to go up, but it fails to go up, and then this will now become our flippy demand to be a supply. So you expect the price to go to the downside. That's why the price did reject, and now the price is going down. So the next thing which you like to see price taking out this low. Simple as that. Now let us show you the trade which we took, but let me open a new chart. We took GBP USD, so let's use this one. So let me delete everything and show you why. Okay, going to use our H4 time frame. So as you can see, guys, we did have our swing low here. Why? Because the price went up, inducing the zones, right? Inducing this zone. You can see this is a breakout structure. Let me show you breakout structure, and now we can call this a change of character. The next thing which we anticipate this move to hold the orders. But you can see that the price failed to hold the orders right here, guys. You can see price failed to hold the orders, meaning now we did have a drop, base drop, meaning the price took out the structure. So this was the last opposite candlestick right there. And now you can see that we also did have that inducement level. So this was our inducement right here, guys, as you can see, meaning this is a liquidity, and this now became our supply. So once you have identified such, you go in 15 minutes time frame. In 15 minutes time frame, what do you want to see? You just want to see price coming back to your supply. So here we did have this low, meaning we did have a breakout structure here, but you can also see this zone was induced, price coming back to the supply zone area around this zone. They just extended a little bit, but they went down. You can see now the price even give us a last opposite candlestick. Let me just put this one at the bottom. Right now you can see price came back to this zone area right here, guys. As you can see, this was our supply level, and you can see the price went to the supply. They did give us a breakout structure, change of character around this zone, change of character, something like this. You can also see that we did have this bullish engulfing candlestick. So this was a liquidity. So the next thing which you like to see, you want to see a zone being induced. once price induce that zone, you go and look for your sell at your supply. Now you can see price came back to this supply right here, right? Price came back to this supply, and now you can see we also had a break of structure here. Even though the price didn't take out this actual low, they did give us a break of structure right here, break of structure, and this was my inducement right here, guys. As you can see, we did have a liquidity. Where do you look for your entry? Look for your entry at this supply level, this supply level. We also shared this setup in our free Telegram group, and as you can see, here was my entry was here. Then I use 15 pips as my SL. My take profit is 50 pips, right? 50 pips. But for me, I'm looking forward for them to continue going down, or they can come and reject to this demand zone A. But this is not a good shift from a demand, so I'll expect them to continue going to the downside. And for me to say this was a valid trade, I use DXY. So DXY will help me to understand what I'll be looking for on my GBP USD and on my euro. Even euro, we took a sell. As you can see, we took a sell there. So I'm gonna explain why I use DXY. So DXY can help you to understand if DXY goes up, GBP and all other pair will be against USD will be going down. So that's why I use DXY. So on DXY we did have a swing high, swing low, and then a new swing high right there. But if you go in 15 minutes time frame, that's where it will now become clear for you. So you can see that we did have a demand, right? But this first demand was never being mitigated. This one right here, guys, this one, the price just came back and tapped in, but they didn't mitigate it nicely. So that's why the price came back. So this zone was being mitigated and another zone being mitigated. So this zone will now become your inducement, right? And then you can see the price came back, induced that zone, now come back to the what? To the actual demand zone area, something like this, guys. As you can see, we did have a break of structure, change of character, and then we did have a fair value gap right there, and the price went up, and you can see where the price is going. This high was also being taken out, meaning the take profit for me was being smashed because I used 50 pips as my take profit. So I used TP1, TP2, and then it was smashed. And also euro, that's the same concept which I used, same concept, just that this one they didn't take out the low though, but it did give me what I was looking for. So this was our swing high, swing low. We also did have a swing high and swing low, meaning this was a demand. So it was a failed demand, right? A failed demand because the price was coming from a supply zone. So it was a failed demand, and then the price just gave us a change of character, break of structure, and a successful trade was being made here from this zone to this zone. And you can see what the price did after reaching this zone. So meaning this zone now became my inducement, right? So this was a successful trade, but it also became my inducement, whereby I looked for my sell order after the price took out this high and then went into the to the breaker, and the price shifted. So if you watch our previous videos, you can also understand we also shared this trade right here, saying we like to see price rejecting and goes down, and it played out. So you just have to go and watch all of our videos and you'll be a successful trader. You have a blessed day, guys. Thank you for watching.